Welcome into a brand new episode of WSI TV. Enjoy the show.
Hi guys, welcome back to WSI TV. Today we are going to be doing another market update for you. Of course, I am joined by Jim Sampson. How are you doing today?
Good. Thank you for having me. Hello.
Of course. So today we are coming to you with an episode on, of course, it is Martin Luther King Jr. Day, but we are still hitting the ground running. We are looking at the markets right now, and you have quite some interesting insights for us today.
Yeah, it's interesting. So first of all, the key chart we always start off with is, are we in a bull market or a bear market? Well, we're in a bull market still. Which my proprietary system called out on September the 9th. And, we're now well into January, so it's been turned out being a nice prediction so far. What we're seeing right now, though, is, for weeks now I've been saying, I'd like to see a healthy correction. I'd like to see a healthy correction. And the market isn't listening to me. So what we've got right now is a very, very extended situation. And again, I'm not going to get in the way of that. But at the same time, I'm getting increasingly going to be less surprised if we see what could be actually a sharp reversal instead of a more healthy gradual correction. I think it's interesting to look at 2018, which we can see back here. It's almost doing the same sort of thing, same time of year as well. Towards the end of January, you see this big exaggerated upwards, and then in a state of 2 weeks, it comes back down to its, back down to its moving average, which is a healthy thing, but may perhaps not to happen so fast. So that's that. That always throws a lot of people off the ride, and that's what the bull likes to do.
For sure.
Doesn't want to make it an easy ride. So don't be surprised if we're seeing a reversal, and as long as it stays, keep tuning in. As long as it stays upwards in our as far as our criteria, then don't worry. But it's getting increasingly likely. If you've got open positions, we're going to start setting stops to lock in those gains we've enjoyed, so that if that reversal comes, we don't lose everything we've gained, and let it just chug along there like that.
For sure, yeah. And we are in the midst of earnings season right now. That
Right.
is, of course, the first quarter of 2020. How does that play into that for the fact that we see a correction coming?
So yeah, and that the game Wall Street always is going to play. They typically like to underestimate their earnings so that they can look really good when they beat earnings. That's the game Wall Street always played. Not expecting it to be any different right now, but I think because the stock market is in such need of a correction, I think the first bit of unexpected news, bad news that comes along is going to upset it, and then people are going to be crying that it's a bear market, and sending out messages of fear, when really the market just needs to calm down a bit, and it won't need much of an excuse. But so far earnings season, it's looking like the banks and so on are looking on course. It's still very early, of course, but like I say, it's going to be what they blame as being for the overdue correction, the slightest upset,
For sure, yes. And we do have other metrics that we use for like fundamental analysis in addition to things like what we were just talking about with the earnings reports. So we have examples like unemployment numbers, inflation numbers, jobs reports, things like that. But those are actually changing the way that they're coming out now. So we did have in the past where journalists and the news media would have pre-access to those numbers.
Right.
And starting March 1st, they no longer will have that.
Right.
So what do you think that's going to do for its impact on the market when those numbers come out?
It's going to be interesting to see. But I mean that access to early information, when they're trying to make it fair and so on and things like that. I think that's one we're just going to have to watch. But it's an interesting development. But I'm always going to come back to the market is going to, like we just talked about with earnings season, the market's going to do always what it does.
Exactly.
And unless it's down to individual stocks, insider information I don't think is really going to be as powerful, because the overall market, like the S&P 500, has got so many factors, not just the economy. And if we were going by economy alone, we discussed in previous weeks how the stock market marches to the beat of its own drum typically. So I'm not going to think too much of an impact on that, but it's interesting.
It is, yes. So kind of zooming out here, we are talking about trade relations and things just in the general economy across the world. Last week, the United States and China did ink and finally sign the Phase 1 trade agreement between the two countries. So we've got things covered like intellectual property, an increase in agricultural purposes, and the dispute of the business settlements. So then we are looking at just in general how that impacted our domestic markets and foreign markets. And behind me we do have both the S&P 500, which is kind of our metric for the United States,
right.
and then we have FXI, which is the Chinese stock market, if you want to explain more about that.
So so this is basically the Chinese equivalent of the S&P 500, and you can see a tale of two charts here, where one, the American one is, up and away, strong as an ox, but the Chinese market has been in a sideways drift now, and not even especially healthy right now, really for best part of, 2 years, it's been kind of like chugging along like that. So here we see, who is in the higher, who has the higher ground in this kind of negotiation. And that's why, Trump is, making ground, and he's even referenced it himself. It's like their stock market is not as healthy as ours. And there you see like that. I mean, China is making huge moves to become more independent, to become more of an economic powerhouse than it is, which, challenge America's superpower status. But, the stock market, which is a source we trust for our information, is saying not yet, So that is, I think, explains the position he enjoyed, with that negotiation.
Sure.
And a lot of it's well overdue. China has been, disrespectful of intellectual property laws, to an outrageous degree, actually, and the Chinese government's now being forced, hopefully to, put a stop on that and have, genuine, more fair trade.
Sure, yes. And I hope that's our last word on the trade war for some time now.
Right,
but,
or what we thought, what they were saying was a trade war.
Exactly,
Right,
yes. Yeah. The moniker for it. But zooming into specific companies now, like we were talking about, earnings season, of course, is well underway already. We're looking specifically back into the streaming wars. You and I have kind of just been following this over the past couple of months. NBC Universal is actually the last major media service to release their streaming service. They're going to have Peacock, and they're owned by Comcast, so we're going to be looking at them in the future. They actually don't release until July 15th, but they did preview to New York last week, and we saw a 10% increase on that day.
Right.
So we're looking at that.
There was a nice bounce there.
Yes.
What we got here, we got...
so here we've got Disney.
Right. Disney and Comcast, and our competitors in the streaming wars, and they're competitors, but you can see they're both looking very healthy. If I had to put money on one horse right now, I'm probably looking Disney, but Comcast is definitely happening. And the real point being is that the whole complex, whoever's right in this game is winning. These have been great stocks to own, and looking forward ahead. I think this is the beginning phase of nice bull runs for stocks who get it, throw their hat in the race for that.
For sure, yeah. So I think that's all we had for them today. We are looking again at the general market to see if history does indeed repeat itself. But
it's an interesting thing because if we look at 2018 on the S&P 500, it's got this almost like this mirror image thing going on. And if you were to, we can see here there's January 2018. You can see, and there's January 2020. And it was interesting to see that although the market started off so well, before November of 2018, we had our sell signal, our system said to get out, which was a nice profit then. But it also just shows that, in terms of the election and so on, coming up in November, we still may have, Trump may still have to be handling, not quite out of the woods yet in terms of the looking ahead that the stock market does. But so far, it's starting off the year as if, at least not much is going to change in Washington,
Very good. Well, thank you so much for joining me today,
Thanks for having me.
We really appreciate it, and we will see you guys very soon.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.